All right, my name is Chris Campbell. I'm a practicing CPA, and I work with individuals and small businesses to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about business owners hiring their kids. I was listening to the Breakfast Club the other day, and I'm trying to remember who was on there. I don't remember who was on there, but the Envy had mentioned it. I think the guest had mentioned it as well, as far as hiring your kids. So if you're a business owner, hiring your kids, you can pay up to $13,000. As I'm thinking about it, I think it was Wall Street Travel that was on there. Shout out to both of you. They glanced over it and they mentioned that you can pay your kids $13,000 a year and it's tax-free. I wanted to dig a little bit and just give some points into that as far as some of the nuances with that. And then also just talk about alternatives in instances where you don't qualify to that whole $13K tax-free. So the idea of hiring your kids is, and why it's specifically $13,000, at least for 22, is actually $12,950 to be exact. But the reason why it's $13,000 and why people say it's tax-free is because that number is essentially the standard deduction that one would take on the returns. The premise is that if you were to pay your child that amount, and assuming they have no other income, if they were to actually go and file the tax return on their own, they would fall under the standard deduction. So if you paid your child $12,950, they would technically go to file their tax return. The first $12,950 that anyone earns, at least as a single person, is free under the whole standard deduction. So that's where the premise of that amount comes from. And then that standard deduction actually goes up every year. The idea would be that you would pay your child up to the amount of the standard deduction each year. But now there are a couple rules associated with that and some workarounds that you might be able to do. So the first is that if you're paying your child, it must be from an entity that is 100% owned by either one parent or both parents. So whoever's claiming that individual must own the entity that is paid from. Now this is if you want it completely tax-free. If it is from an entity that you don't 100% own, you can still pay the child, but it wouldn't be 100% tax-free because you would still have to get involved with payroll taxes and things of that nature. If it is from an entity that the parent 100% controls, you get to avoid the payroll taxes. So that's also a big caveat, because when you pay someone or you pay an individual and you put them on payroll, you normally have to pay payroll taxes. But the whole idea of what the law allows you to do is that if you're paying your child, they allow you to bypass the payroll taxes. So in order to bypass the payroll taxes, the entity needs to be owned 100% by the parent. Now, in instances that they're not, because I have a few clients where they are involved in partnerships that they do not own 100%, what we've done in that case is we've funneled the money through a management company. Instance where taxpayer is a part of a partnership with other partners that are unrelated, they want to be able to pay their child. So what we've done is we've created a management company for that partnership that is 100% owned by that manager, and we have the partnership pay that management company as a vendor. Let's say this $13,000, which then takes that same $13,000, will then in turn pay it to the child. So that is a great workaround if you're involved in a partnership or a corporation, if you're not the 100% owner, because again, to have the complete tax-free outcome, it has to be owned by the parents. Another thing is the work is supposed to be reasonable. Paying someone $13,000 over the course of the year, make sure the value of it was commensurate with $13,000. So one way that you can justify it, and a lot of business owners would do this, is just have your child work social media. And also at the same time, you also want to make sure that it's a job that they're able to do. You can't say that your 2-month-old was doing social media. So 2 months might be a little early for it. Usually I tell my clients that they may want to explore that option at maybe about, I'd probably say about 7, 8 years old, when they can walk around, comprehend, do actual stuff. So in the event that you got audited, you can say, all right, I told my child to go do this and this. They did some paperwork for me. They did things on social media for me. So a lot harder to say that when you have a 2 or 3 year old. So usually you'd start that maybe around 7, and complete tax-free thing to avoid the payroll taxes, that goes up to 18. So once the child turns 18, you can't do that anymore as far as avoiding the payroll taxes. You can still pay them, and they'll still avoid the regular taxes, but you'll still have to pay the payroll tax. So that complete tax-free strategy really only applies for children, I really would say between 7 to 17. Once they turn 18, that party's over. But it's still a good strategy to pay your children, even if they're over 18, especially if you're in a higher earning bracket, because it's also a good way to have some of your money taxed at a lower bracket. Recently walked through a client paying a child that was in college. So they were in college, so they're over 18, so they would not be able to avoid the payroll taxes, but because they were in a pretty high income bracket and the child doesn't really earn any money, it's a good way to shift those dollars being taxed at a lower bracket versus had they kept it, they would have been paying a higher tax rate on those dollars. So either way, paying the children, is a good way to shift income, whether it be a completely tax-free transaction or even if it's a way to just lower your overall tax bill while at the same time providing support to your kids for, let's face it, is money you were probably going to give them anyway. You know what? They're older. Why not get the tax benefit for them? So it's something great to do if you're a business owner. So I figured I'd share that. That's all for now. So if you have any additional questions about this topic or any other tax or accounting-related questions, feel free to reach out. We'd love to help. All right. That's all for now. See you on the next one.